Welcome to the weekly market recap. This is Fred Razak, financial contributor for YWO, and we're reviewing the week of February 23rd to February 27th of 2026. So the highlight of the week was the State of the Union address. That's when President Trump delivered his State of the Union to both houses, and I must say it's probably one of the most entertaining and probably disconcerting State of the Union addresses that I've ever seen. On one side, you've got the pro-Trump and you got the against Trump on the other side, and it really was a war of words. But before we get into that, looking at the markets this past week, they're really consolidated. And that's really because a lot of things are standing on balance, but we're going to review that in just a second. But first, looking at the categories, starting out with the Forex symbols, the major pairs really consolidating with low volatility and shifting over to the indices. They mostly consolidate. Yes, there was a little bit of a climb towards the State of the Union address, but those gains were paired afterwards. Now, looking at the stocks, they reflected the greater market and really a very mixed environment. Netflix, though, did have a gain of about 8% from week to week. Apple and Procter Gamble had some decent gains as well. And looking on the downside, Nvidia did retrace and lose some ground. Now, looking at commodities, both metals were flat, and natural gas and oil did retrace after that nice little run up, with a little bit of concern of what's happening in the Middle East. However, they're not going higher, okay, which I would have anticipated that they would do in this climate. Now, looking at cryptocurrencies, Solana, BNB, and Ethereum mostly gained throughout the week. Again, not major gains, but just mild gains throughout the week. So the market's really consolidating almost across the board. What does that mean? That means we're in a very important junction. Markets don't want to go higher because it doesn't seem like there's going to be an impetus for us to go higher unless interest rates are reduced. However, in the current climate we're in, we're also in geopolitical turmoil. What does that mean? Well, the buildup of the U.S. Army in the Middle East, with that confrontation coming up with or not coming up with Iran, will be something unfolding, and the market's going to have to absorb. With that all said, okay, that's sure to affect metals, especially gold, and sure to affect some of the energy stock or the energy commodities like oil and natural gas. As we've mentioned before, the Strait of Hormuz does see about 20% of the world's oil output, so that's sure to affect it. Now, in this current climate also, we're not sure where we're going with the interest rates. Yes, inflation is down, but is it down enough for long enough of a period for us to start decreasing inflation? Now, this is a really important factor because we did see the mortgage rates dip below 6% in the US. That's a major catalyst there. Now remember, we're still in an environment where the dollar is getting weaker versus most of the major pairs where it's standing right now. But this past week it was flat, and that's really some of the questions about what the reactions are going to be in case the United States does reduce interest rates. Now we're heading into a very important month. We're wrapping up February, but we are heading into March, which is a relatively busy month when it comes to corporate earnings. So that's something to look forward to. So all these states are all happening at one time. And so we sometimes in the markets, yes, there's a lull. There's a point of just a breathing space for us to digest what's happening in the greater economic scale, and then you'll see the markets coming back to life, either on the upside or the downside, but we do look forward to volatility. This is Fred Razak. I want to wish you guys a great weekend. Thank you.